Strong start on the year. Last couple of days, really challenging. We track our chopper system. This is a system that when it does well, we typically don't do as well, and it's done really well today. Really choppy market, really hard to trade. You see how it was turning down, this chopper strategy was turning down, which is favorable for us, and then it's turned back up right now. So really extreme amount of chop. Market just will not go down. There's just dip buyers at every level, and it makes it hard. You know, you get this 180-point move in the NASDAQ in about 45 minutes, and then it just it quickly rebounds, goes to the lows. We had the short trade right in here on some of these. We were long, got stopped out on the way down, got short here for continuation, and then it reversed on us again. Now it's reversing again. And so chopper is the type of strategy. This type of market doesn't usually chop like this on a regular basis, but we had a little bit more of Q4 chop the last couple of days. And so let's go over the trades on the day. Soybeans and gold were the highlights. Let's start with soybeans. Pretty good week in soybeans overall with some of the trades. Today, only one trade, SR counter trend 2 soybeans. We had grains day trader with a couple of these trades. Couple of shorts that were profitable, one short that was a loser, and so soybeans were a highlight. Exhaust in reverse captured it was a loss and a winner on the day, plus 300 overall. Silver exhaust in reverse down on the day. It was profitable. It hadn't traded in a while, so it was profitable here, and then it lost here. And RBOB down on the day. This is another market that's been a highlight this week that hadn't traded in a while. 3 for 3, and then comes in today down 88. Not too bad. Natural gas, no trades. Crude oil, we had some losses in crude oil today. We were buying the dip, and today the dip went down and sat down, which means it didn't bounce. And so we like markets that dip and bounce. And so crude oil dipped and bounced here, dipped and bounced there, dipped and sat here. So if it dips and sits and you're in a day trade, hard to catch the bounce. SR counter trend 3s might give it the opportunity because they hold it overnight, but glad we're not in it as we go into the weekend. Just stay flat there. So silver, no trades on the day. Gold had a couple of nice short trades in Asia Gold 4 short plus 975 and plus 575. And then we get to the stock indexes, which are really challenging. Gap continuation reverse, have an update for you on this one that I'm going to share with you. I'm going to add it to the 50K portfolio and remove Night Trader. We'll go over that in a minute. Tick Wave, no trades on Tick Wave for this setup. VIX OC lost, one of our strategies that tests back to 2003, one of the new strategies that lost, taking a long trade. Market is just, it should go down. It's due for a down cycle, and it's so tightly wound. What makes it difficult to trade, like I said earlier, is that you get this 180-point move right here really fast. About less than 45 minutes, you get a 180-point move in the NASDAQ, and so you either have to pick that short or that long, and so you have a gap continuation, and then it reverses, and then reverses again. So very tricky to trade this kind of market, and we'll go over some more of the trades, explain why. The gap continuation reverses is designed to catch those reversals that continue reversing upward. It can also take short trades, but it specializes in long trades. So VIX OC 60-minute breakout minus 2570. Took 2 breakouts. We've had some success catching the reversals with the breakouts as they go higher today. They were both stopped out minus 2570. VSDES not in the portfolio, minus 1262.50. Here's PR breakout getting short at the lows. It goes down, rolls over, gets stopped out. And 2021B, just no follow through. It's not normal for a market to never have any follow through to the downside. And so this very tightly wound to the upside. VSD and Q focused on the long side, minus 1625. Gap continuation 2019, big stop loss. You know, no fall through the downside. It comes down at these levels and it bounces. So it makes the low early on, and then that just stays there. And so oftentimes when you see this low, you'll get the gap down. So the over the weekend risk, in my opinion, is to the downside. We're so overbought up here. There's not a lot that can take it much higher, in my opinion. Yeah, it could float back to the current high levels, about 400 points from here. but over the weekend risk is to the downside in my opinion, and so they've propped it up a couple of days in a row, made it very choppy to trade. So Viper ES did a good job catching this. This is not in the portfolio, plus 200. EVP1 struggled today. This has been our top strategy on the month, really killing it, and then it's down today, so good time to actually start this strategy. Might add this one to the 25K. So really took off here, and it had this drawdown right here. So it was up on the month about 11,000. Now it's up 92.90, and after two $1,000 stop losses, down 2,050 on the day. Dynamic tick pullback minus 250. That one hadn't traded in a while, and the trend is hard to. The trend is to the downside in my opinion, but the price action keeps the buy signals in, so it's stealth. It's like a stealth downtrend. That's what makes it challenging. Another factor that has made it challenging to trade, COVID 3, meaning NASDAQ, needed a bigger stop loss today, up over 1,000. We have a profit target on this for the portfolio. It was up about, I think, 1,400 or 1,500 at the lows. Our profit target on the shorts is 2,900, 1,400 on the longs. Bounced before it rolled over, but so it bounces and it rolls over, but it doesn't even roll over to take out the early lows. So a lot of times markets traditionally will they'll go down, they'll bounce, and then they'll roll over again. But we get these markets that do this, and they don't, and then they gap down. So watch for the gap down on Sunday night. If you watch the market on Sunday night, so gap continuation 2019 minus 325, and all strategy access. Adaptive moving average minus 175. Had a good short trade going. Market came all the way back and reversed a long time. So we're down on the day. Notice that we're down on the day, but most of the day the market is going up. Another factor that makes it challenging. So you're up, you gap down, you're up here, you're down 2 bars, and then you're mostly trending up. Mostly trending up until about right here, and then you're trending down. So most of the day, intraday, you're going up while you're net down on the day. So the price action can be confusing. 60-minute breakout short. This one has lost a lot lately, but did well today finally, and plus 962.50 on the day. And night trader, it's been down two losers in a row. So we're looking at switching this one out in the 50K portfolio. Look for more details on that over the weekend. It hasn't done terrible. Let's look at it over the last 6 months. It's kind of break even, or since June of 2020. So let's look at it over the past year. All right, here it is over the past year. Not a bad equity curve. You see, it made its equity peaks on September the 18th, and then we have Q4 trading. We had this rough October, bounce back, and now it's kind of rolling over again. And the market has recently made new highs, but it's not trading the way it was when it was, since 2016 or so. The market's not trading the way since 2016, so it's kind of at this point here where it looks like it's going to roll over in the equity curve, and the risk on these is 1,500, and so I have a better way to do this strategy for the 50K portfolio, 25K, 50K portfolio, and I want to show you that. I'll send you the update this weekend. It's gap continuation in reverse, less risk, no overnight trade, and I just don't want to take long only trades right now because I anticipate a rollover in the market action, and so this strategy could still do well. You'll have access to it, but we'll be officially adjusting the 25K, 50K portfolio, and we'll be explaining that more as well in our webinar upcoming here. So in general, the portfolios are in a good place in a drawdown level. That is a good place to start in a drawdown, and but I wanted to share this with you. So 50K portfolio, automated trading systems portfolio, we go over portfolio design, a lot of questions on how to do that. For example, why do we have strategies in the portfolio that are down? We like to trade with strategies that are that are equity peaks, and we like to trade strategies that have had equity peaks but may have gone down over the last 6 months that we anticipate are right for the current market conditions. So I don't want to trade every strategy. I don't want to optimize a bunch of strategies and trade a bunch of strategies that are equity peaks. I want to trade a portfolio of strategies that are different, and so when they're different, they have cycles, and I want to match the cycles so that when the strategies that some strategies are winning and some strategies are losing at times, and so you don't want to just get you don't want to get 10 trend following systems that are at equity peaks as soon as the market goes into counter trend mode, and then they all go into a drawdown at the same time. So we'll discuss this further at the webinar on January the 27th, 3 p.m. Central Standard Time.